highlight of the morning for you, Rick Worley. Well, good morning to you as well. Welcome to the morning show, everybody, here on Stock Market TV. Spencer Israel, JC Parets, Steve Strazza, Alfonso DePablos with you this morning. What is going on today? Well, we'll talk about, what happened last week. Strong end of the week, of course. We'll put all that into context. I know JC has the yen on his mind. I know Strazza has some charts. We have a guest today, Bill Kelleher, will be on the show at 9 o'clock. He's a fan favorite, one of our favorites as well. We'll have Mr. Ian Cully on at, around 9:35, 9:40-ish. Talk about what's going on in his world, commodities, fixed income, currencies. And that's the rundown. I have a few charts or stocks that I want to discuss. We had some earnings this morning. We had some news this morning. And that's the deal. Good morning, everyone. Hope you all had a great weekend. We're fired up. It's a Monday. Who doesn't love Mondays? You don't love Mondays? Get out of here. We love Mondays. Let's go.
If you don't love Mondays, I think you're doing it wrong if you don't love Mondays, right?
Doing what wrong now?
Life.
In what way?
I think about this a lot, right? Like, okay, so there's 7 days a week, 8 hours, right? So there's 24 hours in a day. You get 8 hours of sleep, right? Which Dr. Perlman recommends, 7 to 8 in my world, right? So that's a third of the day right there. Third of your life is sleeping right there, right? And then let's say you're working 40, 50 hours a week, pretty standard. It's another third of your life right there, right? That's half of your waking hours. Think about it. Half of your waking hours. If you don't like that, then you're spending half of your waking hours doing something you don't like to do. Like, that's got to suck.
Bob Dylan was a very quotacious man. I'm going to read you one of my favorites. This was hanging in my old office. I don't know where it is now. A man is a success if he gets up in the morning and gets to bed at night, and in between, he does what he wants to do. And when you like your job and you enjoy what you do, you're that. So
yeah, even if we didn't
get a Bob Dylan guy, Steve,
big Bob Dylan guy,
All right.
guy.
Didn't see that coming there, Spencer?
No, I didn't see that coming.
I will surprise you.
Yeah.
But no, I'm with you. It helps a lot. I think we've all been in a place where we wake up on Monday morning, kind of dread what we're heading into. I spent a good deal of my life feeling that way. So when you're on the other side, I think it's easy to be grateful for it.
I think you have to go through that experience of, oh shit, it's Monday. How many days till Friday? Like, I think we all have to be in that scenario to finally appreciate, right?
It gives you a healthy contrast. Yeah. For sure.
Yeah. What do you say? What do we say? We get into little Japanese yen.
Yeah.
Long New York Knicks in yen terms. Let's go.
I want long Knicks in every currency. Currency. Real money and fake money. Long Knicks.
Every time we discuss Knicks on here, JC makes it a point to talk about how good Jalen Brunson is, and Jalen Brunson made it a point to let everybody know just how good he is. Prime time yesterday. We had like a lunch game, 1 o'clock game.
Fun fact. I grew up a Knicks fan. Did you know that? Did you guys know I grew up a Knicks fan?
Why though?
Because
of
the Heat didn't come till I was 6 or 7.
Right. Oh, that's right.
And my father. So that there was no professional team in Miami, and my father's cousin, when they came from Cuba, my father's family went to Miami. His cousins, my grandfather's brother, went to New York. So my father's older cousin would spend his summers in Miami. And it was very easy in the late 60s and early 70s to be a Knicks fan. So my father was a Knicks fan his whole life. So I was as well until the 90s got here, and, well, things changed. Let's go.
Probably for the best for you. All right, let's go.
I'm also a huge Warren Zevon fan. Stock Market Mike, I'll have you know. Big Warren Zevon. And I was listening to that song all around Asia on every flight because we weren't.
All right. Dow futures this morning doing absolutely nothing.
Mm.
38,500, just under that. Flat morning today. S&P futures, though, up 10 handles. That's about 20 basis points. 51.40 for the S&P. NASDAQ futures up 1/3% this morning, 60 points. 30-year bond futures, get this, Strazza, not
Yeah.
down. 30-year bond futures holding that 114 level, up close to 0.5% this morning. Gold flat, silver flat, copper up 0.75%, up towards 460. So all of that in the metals market puts gold at 23.5, puts silver at 27.5. Copper sticking that landing, 460 for the copper. Wow, crude oil down almost a full percent this morning, $83 per barrel. Japanese yen, quite the reversal overnight, quite the reversal. Japanese yen trading like a meme coin for the 4th largest economy in the world. That's probably going to end
All this
well.
volatility from last week, JC. You may not
Can we
know
finish?
This was from a Bank of Japan.
They have those there.
Yeah.
Volatility index 15.25. Let's quickly go over to the funny money. We've got Bitcoin down almost 1,000 points this morning. 1.25%, 62,300 for the BTC. Ethereum down 3.5%, over 100 points, 3150 for the BTC. And then, of course, the old Solana, all the way down to 134. This thing down 35-40% very quickly. Down 2% this morning on the Solana. Total crypto market cap, Spencer Israel, $2.24 trillion. A lot of action in the meme coins, not just in the Japanese yen, but some of these meme coins really moving this morning. You've got the Joe Biden down 21% today. Can you believe that? Can't believe it. Popcat down 13%. Brett down 11%. Baby Doge down almost 7%. And the list goes on. Everything, all the meme coins down this morning as crypto taking a hit.
I don't know how much data you're working with for yen, but if you look at JPY,
I'm working with yen.
Yeah, like how far back does your data go? Because I think the most
depends
oversold.
What platform I'm using. Goes back forever, depending on what we're using. Why?
So I'm going back to 86. This works. This is the most oversold yen has ever been. So like one green candle coming off the most oversold reading ever in terms of the daily RSI 14. Not shocking when you put it in that context, right? Actually, the only close oversold reading is 2002. Yeah, you see that? January 02.
So we're looking at oversold readings in the yen in RSI.
Yeah. Most dude, it was at like 11 and change. That's a low RSI rating.
Here, let's
I'll get the chart. It's probably tough without having a visual.
Well, I could just show you right now what's going on if you want to zoom out long term. This is dollar yen. Throw up slide 2 there, Spencer.
Oh, ooh,
hold on.
I love it when you zoom out.
You love it when I zoom out?
I love it when you zoom out.
Well, this is really zooming out. This goes back to the 70s.
Ooh.
So I think the key here is that Japanese yen has a lot lower to go.
Yeah.
Right?
I was looking at the inverse. I was looking at yen. So you could do it, I guess, yen.
Oh, I understand, right? So this is dollar yen. So as this line is going up, that's yen losing value. So as you can see here, we're looking at 34-year highs for the Japanese, for the dollar relative to the yen. So in other words, 34-year lows relative to the yen. But when you go back to the 70s, we got a long way to go. Like this crash. Can we call this a yen crash? Is that we have volatility? So. We have yen making 34-year lows. Can we categorize this? Strazza is our chief crash correspondent here. He's the one who decides what's a crash and what's not. Does this constitute a crash?
I give this the crash. Yeah.
All right. So this is crash, bonds or not. All right.
I know. It's a tough one.
No one said this was easy, Strazza. That's why you get paid the big bucks, buddy. That's why you get paid the big bucks. Slide 3, Spencer, please, if you may. Here we're looking at the Bitcoin in yen terms. How are we feeling about this?
Oh, come on. Get out of here.
What do you mean get out of here? Char crime? Anything priced in yen looks good?
I live my life in dollars. And most of us do. I'm starting to like this less and less because
Every
the
time
dollar-
I'm in Japan, I kind of wish I was living my life in yen.
Yeah, I know. It's kind of like any of these charts that are at the upper bounds, we could just price them in different currencies and show a breakout. I don't know if that's fair.
You
No?
think this is more fair? Here, throw up the new slide 4 here, Spencer. The new.
Like
What value are we supposed to get by pricing Bitcoin in yen?
mhm.
What value do we get by pricing
This is
Bitcoin in yen?
What value do we get in pricing Bitcoin in yen?
Yeah.
Like if we were
Go
in
back
Japan
to it. Go back to it.
or talking to people in Japan who were dealing in yen, sure. So this is relevant to some people.
For the record, I'm going to go out on the record and say that I don't give a shit what is relevant to some people or what is not. This is a very selfish endeavor. I couldn't care less what people are interested in. Are you kidding me? You don't understand what people are interested in these days? That is not my problem.
Okay.
We
So
want to
then
price
why?
assets. We want to price assets in the world's most important currencies. And we even want to price assets in some of the world's least important currencies to really go out on that risk curve. A lot of times we look at assets priced in, a basket of emerging market currencies, Japan, British pound, euro, Aussie. We don't just want to talk about Americans. We are earthlings here, Spencer Israel. So we want to price our assets in a variety of different currencies to get different perspectives. So to answer your question, what value does it bring to price Bitcoin in Japanese yen? All it does is give perspective. That's it.
That's fair.
Puts everything into context.
When you price it in euro, looks a lot more like just Bitcoin. Doesn't
Looks
it?
a lot more like the dollar because the yen is just so much shittier than the euro.
Yeah. Right.
Is really the answer. All right, next. So this is the one that Spencer and Strazza approve of. Is this okay?
Green light. Nice job.
Yeah, Spencer, is this okay for you?
Yeah. I like this.
Okay.
So for us here, Earthlings that are looking at these cryptocurrencies, I am looking at these stuck below these former highs, right? And again, we live our lives in dollars. The majority of the world is dollar denominated, so I would argue this is more important than Bitcoin price in Japanese yen. To your early point, Spencer, doesn't mean it doesn't add value to look at it in other currencies. Just perspective. We're bringing it back home here to the good old U.S. of A., where we play baseball and eat hot dogs. Bitcoin, Binance, and Solana.
Binance looks like it wants to go first, JC.
It might. We've talked about this. Like Strazza, which one's going to go first? Is one going to lead the other? Are they going to happen simultaneously? Right? You're right. It could. For sure. It is interesting, isn't it?
I continue to see that deterioration beneath the surface. Louis been speaking to it when he comes on here. He talked about it on Friday. The internals just not good for crypto right now. So that needs to change. And we talked about last week how Solana couldn't reclaim pivot high VWAP, not good. Binance breaking out of this range would be a nice bullish development in an asset class that I think really needs some bullish developments right now.
Throw the commodities, Spencer. So here we're looking at what the bond market thinks about inflation, right? So this isn't the Biden who's been lying to you, right? This isn't the pretty lady on the TV who's been lying to you. This isn't the 3 economists that are still employed that have been lying to you. Right? This is the bond market, guys. It's the bond market. It's all business, baby. All business. Who are you going to trust? Are you going to trust the Biden, the lady on the TV, the economist who's getting paid minimum wage? Probably. How much could these economists possibly be getting paid? Or are you going to trust the bond market, Spencer?
Well, if I've learned one thing from you, it's trust nobody except for dogs and bonds. So,
dude, my 1-year-old punched the dog in the face yesterday, man. Like just socked him right in the nose.
Really?
Yeah. And the dog's owner is like a really, really large man. So, situation.
When dog for your family?
Never, according to my wife.
Boo.
All right, listen. They keep telling us that inflation not a problem. Interest rates are going lower. I don't know if this Biden guy is looking at his charts upside down, or maybe Biden's intern. I think it's his intern is looking at the charts upside down. Man, I don't know, man. I'm seeing interest rates going higher. They've been going higher all year. Call me crazy. So, and by the way, do you think that these people lying to you, do you think that the fact that there's an election coming, you think that it's just a coincidence? Or do
No,
you think
of
there's
course not. Of course not.
shenanigans? Little shenanigans? No big deal.
By the way, speaking of rates, we should mention obligatory. There is a meeting this week, JC, a meeting of your favorite people on earth, the people that set the interest rate policy for this country. So,
Who? The bond market?
find out. No, the other people.
What people?
Yeah, the Fed.
The people that listen to what the bond market tells them to do, those people?
Sometimes
Sometimes or all the time?
it's a dialogue. It's a back and forth.
Is it?
Anyway,
Is that what the pretty
Fed
lady on
meeting
the
on
TV
Wednesday.
tells you? Is that one of
No.
these 2-day meetings because one day is not enough, or is it a 1 day? How does it work?
They're all
these days?
2-day meetings. Although I don't really know. I guess on day one they debate, and then on day two they debate, and then they announce. I don't know.
When happy hour? That's what I'd be asking.
Yeah.
Okay. Next one. How about this one? What do you think about this one, Strazza? I don't think a lot of people realize just how tightly these copper and oil have been moving together.
I noticed.
Spencer, if you will.
Hmm?
Spencer,
Wait, what chart is this?
the chart that I told you to put on, the oil and copper.
Look at the last 2 days for copper miners too. I mean, wow.
New 52-week highs for copper. Copper up another stick today. What do you think? Does oil follow, or does copper go higher and oil roll over and start going down?
I mean, they all go in the same direction. Like as strong as the correlation is here, it's actually stronger between copper and gold. So I think that's the big signal for both of these. The breakout in gold, I think, indicates a coming breakout in copper, and then what you're showing here is we should expect the same from crude. They're all commodities, right? It's a commodity super cycle. They're all going to go. They're not all going to go at the same time, like we're seeing and we've been seeing. But I think rotation into these guys is what's coming. I don't think it's even started yet.
Spencer, can you throw up the new slide 7? You know, in my experience, the bond market's very smart. Bond market prices in a lot of things ahead of time, right? Bond market's the big bully in the room. Bond market tells the stock market what to do. Bond market tells commodities what to do. Bond market's the leader of the pack, right? What are we thinking?
I'm into it. Keep singing.
Why do people keep telling us that interest rates are going lower? Why do you think? Are they you think that it's because they're stupid, or are they literally it's malicious and they're lying to us? What do you think it is?
Who's lying to you? What do you think's lying?
Well, there's always like on the distribution curve, there's always people that are going to be the last to acknowledge something, right? So if the quote unquote consensus was like 4 or 5 or more rate cuts 5 months ago, and that consensus has slowly changed to like a couple of rate cuts, then that there's going to be the people that are still holding on to that, even as the people that maybe thought a couple of rate cuts 6 months ago now think no cuts or maybe even a hike. So there's always going to be a lag, right? So
the off-sided expectations have acted as de facto rate hikes.
Sure.
I think that's what the Fed wanted. I think this all works for them.
Are they playing? You're saying that they're playing like 4D chess? I don't know. Maybe. I don't know.
No, but I think they want rates to keep moving higher, right? Because they need policy to remain as restrictive as possible for as long as possible before they start cutting, right? This is still, they're doing work against inflation with rates up here. And it was that reset from, hey guys, you're not getting 5 or 6, you're getting 0, maybe 1 or 2, right? That has sent rates higher, and that's helping them accomplish their goal.
I don't know. The more time I spend with you guys, the more I think. I mean, I always thought the Fed was noise to begin with, but now I think just look at these charts and do with it what you will, right?
All right, let's get down to business. Now that we ate our vegetables, let's get into slide 8. Let's get into the nitty gritty, which is why we do this, why we call out these assholes for lying to the public. Why do we do that? So that we can profit from it, right? Let's go. This is why we do this, guys. You want to look around and you want to observe. You have really, really angry people that are very upset at a stock for reasons that have nothing to do with the stock. They have mental problems that they cannot overcome. And when you see this in a widespread fashion, where it's not just one angry guy or two angry guys, but more of like a mob, right, of just angry people, there's vulnerability there, right? There's a built-in short squeeze potential that's inherently built into the stock because of the angry groupies, right? This is that. And we're seeing it, Spencer. Why don't you tell me, because I don't know the answer, why is, other than the obvious, why is Tesla up 12% this morning, Spencer Israel?
Oh, because they have news, sir.
Talk to me, baby.
Mr. Musk was over in China over the weekend, and he has struck a deal with them, whereas they are going to let Tesla roll out FSD, their full self-driving software, to all the Teslas sold in China. They are partnering with Baidu on this. So if you're wondering what the hell's going on with Baidu this morning, that's your answer. Baidu is going to be doing the, I guess, the mapping technology for this. Anyway, so Tesla full self-drive happening in China, and that's why the stock is up. What is up now? Last I checked, it was up. It's 13% now this morning.
Because Tesla's down with CCP.
Hey, come on now.
Me.
Hey, come on. Let's go. So this isn't the first time we've seen this. This isn't the last time we're going to see this. There are other stocks like this where angry people that are just so mentally weak that they cannot overcome their mental problems, where they are angry at a stock. Think about this. You have only certain hours in a day, and you're going to spend that time being angry at a stock, like, because whatever, maybe you don't like the CEO, or you don't like the CEO's friends, or you don't like the people that own the stock, or whatever. When you look at the Trump thing, look at the DJT. DJT was up like 35% in a few days, like, or more. Like, these things are ripping because people get so angry and emotional. So when you identify these opportunities, we want to take advantage of that, take the other side of the people with the mental problems, right? Like, that's our job as investors, to find the vulnerabilities and exploit them for our own profit. It's a very selfish endeavor. So it's not like, and by the way, it's like, oh, but JC, we can help these people with their mental problems and get them help. No, they're not going to listen. You think these idiots are going to listen to you? No, they're just going to get angrier. So it's not even worth trying to help them, right? They're not even going to listen. So this is getting back to, it's a selfish endeavor. We're here to make money for ourselves, for our families. And when you see these vulnerabilities, they say you shouldn't kick someone when they're down, but the truth is it's actually the best time to kick them when they're already down. And I think this is one of these situations. Continues to be, by the way.
But how come you like this setup and not Apple? Same setup.
Are we going to keep talking about the same shit? It's almost like it's talking to like a wall. I'm not going to put a risk reversal on a stock 4 days before it reports earnings. Why would I do that?
I mean, there's more volatility here from Tesla just on a normal Monday than there is from Apple on earnings day. That's the truth.
Then you be naked short puts going into an earnings release. Knock yourself out. I don't need that aggravation.
Apple's up 2.5% pre-market.
Great. I hope it goes to 1 million. I own 103 shares. We talked about this last week. I'm in. But I'm not going to put on a real position going into earnings and be naked puts. I said it last week. I said it like almost a week ago. I would put the trade on if it wasn't for earnings this week. I said it. You're welcome to do it. It's just not how I want to roll. I like sleeping at night. I went to a minor league baseball game yesterday. I had some popcorn. I had some ice cream. It was lovely.
Oh,
I don't want to be thinking about my naked put position in Apple on a Sunday afternoon at a baseball game, right? I want to enjoy my time. I don't need that kind of aggravation, Strazza.
listen, I like the Tesla. It's fine. All right. So Apple is up though on a upgrade, 2.5%.
And Bernstein, is that right?
Bernstein, price target 195. What did they say in this note to make the stock move like this?
Let's
see.
I couldn't tell you what they said, but if I had to guess based on Apple's history of analyst commentary, I would just say it's a simple valuation call. That's usually what these things are with Apple. Or they did some channel check on some segment of their business. But kudos to Bernstein. You don't really see too many ratings changes ahead of an earnings report when Apple reports later on this week. So kudos. I mean, granted, they're going positive on Apple, so it's not exactly the most outlandish call in the world, but
yeah,
nonetheless.
The Bernstein guy is the guy with the wavy hair. Oh God. Italian guy. So they mentioned generative AI. Tony Saganaki.
Oh, this is Tony Saganaki. Okay.
Yes, he's a big one. So that has something to do with it too, right? He's a forever Apple analyst, been on the right side for a long time. Incremental generative AI features set up Apple well for a strong iPhone 16 cycle. This is what everybody is assuming, but Apple's not saying. The next upgrade cycle is going to be wild on our phones.
What upgrade cycle? Oh, you mean for the phones? Okay.
What do you mean?
Yeah.
Oh, analyst upgrades? Yeah.
Spencer's focus here. What upgrade cycle?
Another mover here.
I see you,
Shopify.
Spencer. I see you, dog. I see you.
So Shopify up big, also on a nice upgrade. I really like this one. And Deutsche Bank getting hit out here because they just can't do anything right. You know, JC, we tried to say some nice things about Deutsche Bank, rallied on earnings last week, giving it all back because apparently there were some shady dealings in this post-bank acquisition where they underpaid by an egregious amount. So regulators are in there trying to figure it out. That's never good.
Yeah, they underpaid by
action. It's got to be arm's length.
More than $1 billion. It looks like was what they underpaid by. So.
That's a big number.
Yeah, what's $1 billion here, $1 billion there amongst friends? You know?
Yeah, God.
Okay. Can we do one more?
Billion euros.
I know we got
$1 billion.
I know we got Bill coming on. Bill Kelleher. Shout out, Bill. Can we just throw the Tesla chart one more time? How do you think I'm doing here? This is slide 7, I believe, Spencer.
I just
9.
love that it bottomed the day that it reported earnings. Like into the earnings report. I just love that.
What, Tesla?
Yeah.
Yeah, me too.
So do you think the angry mob getting squeezed takes it to 300? How am I doing here? I think this is a pretty good call right here.
Who
that'd be vicious.
What 160 to 300? Are you going to trade this? Really?
Tesla was maybe the best trade I put on. It was either Tesla or Meta, I forget, was the best trade I've ever put on in my whole life. Last year, I had 2 of the greatest trades I've ever put on ever, Meta and Tesla.
Well, Meta was incredible. We got lucky there. That was
the Meta. Yeah, lucky, great. Fine, but we put ourselves in a position to get lucky. Yeah. By the way, we talked about this a lot. Yes, we got lucky with the Meta, but we put ourselves in a position that gave us the opportunity to get lucky.
I'm not saying it as a bad thing. That happens in markets. You got to be open to getting lucky. And we let it ride too, which is hard to do. So, listen, it's the same for me. It's the same thesis as Apple, right? Like it's a bull market. This is going to be a massive top in Tesla, one of the most innovative companies in the world. Maybe if that's the bet you want to make, I think it's crazy. I would definitely not touch this on the short side. I don't know if I'd long it just because Tesla's a tough one. Tesla's tough to trade.
You don't think this is not a top?
What?
You don't think this is not a top?
I would probably just do this through common. No.
I agree. I agree with that.
I don't love the character of this stock, is what I'm saying, right?
But at least you have an easy out on the long side. The problem is though, Tesla's so volatile that it can shake you out in a day. And
Yeah, that's what I'm saying. That's exactly right.
Yeah.
So that's a tough one.
Tesla's got a beta of 2.5.
Yeah.
Yeah.
So for a mega cap stock,
crazy.
And by the way,
Just look at the size of the candles. I mean, they're huge.
This thing's lost 2/3 of its value. Keep that in mind.
No, not that much.
Oh yeah, 2/3, buddy.
Wow.
Count again.
From the 21 high. Yeah. Okay. I can see
2/3 of its value. Gone. Wiped out.
That's too much.
Maybe.
Too much.
I think it's just about right. And the market is agreeing clearly.
Wow. Yep.
Should we bring on Bill?
Yes, please.
Mr. Bill Kelleher, co-CIO and the Chief Operating Officer of ETF Concepts, and he's joining us once again on the morning show. Let's bring him on.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
It's a nice show you got going.
Bill.
JC.
What's up, my man?
How we doing?
Let me tell you something. You ready for this?
I'm waiting.
Ready?
Yeah.
Guess who loves minor league hockey?
No way. What's your team, JC?
The Lehigh Valley Phantoms.
I love it.
Dude,
I love it.
Can't get enough of it. Minor league hockey, dude. I'm so
I'm gonna have to do a little bit of research, on the Phantoms. What league are they playing in right now?
Oh, I don't know about all that, but they are. My understanding is
if I had to guess, the AHL. The AHL.
I think the Phantoms are the Philadelphia. They're Philly's minor league affiliate, right?
Yep.
Yeah.
JC, I'm on my way to Philly tomorrow.
Are you?
For youth hockey.
There you go. There you go. They still let you play?
There's a World Selects Invitational coming to town to Philly, a big, one of the largest tournaments for, high school age players. So I'm pretty excited. Wow. It's, and also one more shout out, speaking hockey, my nephew just won the NCAA championship for Denver. And the last time we were at this tournament was when he was playing right before he committed to Denver. So we're pretty excited to come to Philly, JC. I'm sure there's going to be a few Lehigh Valley kids in that tournament.
Listen, Philly's pretty good. Try to get out of there as soon as you can. No, Philly's a great town. A couple days. By the way, Barclays Prime over in the Rittenhouse Square.
Yep.
Real nice.
I'm taking notes.
Brazilian. Ask for the Brazilian sommelier. He'll take care of you.
You're gonna have to send me a pairing. You're gonna have to send me a pairing list there, JC.
Dude, shots enough Dupop or left bank Bordeaux. You'll be good to go. Don't worry about it.
All right.
Well, Kelleher.
Let's go.
So before we get going, I want to give you kudos. For all the work that you've done over the years with the CMT Association, putting on these great events. Any words you want to mention on the recent Dubai experience? How was all that? How'd that go?
Well, before we get to Dubai too, I don't know if this was by design because I actually hadn't put two and two together or really thought about it because we have been so busy. But 1 year ago was our 50th anniversary, JC. I hadn't even really registered. Literally almost to the day. I don't know if you guys planned this, but April 27th and 28th of last year, we were in New York City celebrating the 50th anniversary.
Right.
There was a crazy Cuban guy who gave a presentation at that event telling everybody to buy stocks. They thought it was crazy.
Right? Yeah, it was more bearish than bullish event at the 50th. So yeah, that was
bears walking out of my event in tears.
That's right. But listen, what made me remember this too is I received a really nice note in the 10 years that I've been putting on the events, and we've been honoring past legends or members of the association. And if you remember, we inducted Tom DeMark, or Tom DeMark won the annual award. Tom sent me a really nice note over the weekend, and on literally the day that he received his award. Just speaking of the magnitude and what it meant to him, which was pretty special, which is what, as a volunteer makes it all worthwhile. Right. And, one of the things he mentioned was what it meant to him and his family so much, and not recognizing like over his 5 decades, it was something that was made it all worthwhile, and not only to his family, but his contribution to the community. And that's kind of the exciting thing about the organization. A lot of times we focus on it's not the actual award, but it's the fact that you receive it with your colleagues, with those, with all those people that you kind of worked with and battled with over the years, right? And guys like
traded against.
Yeah, competed against, and and it's you receive it with your colleagues, and the fact that Steve Cohen was in the audience and in attendance to just speaks to the magnitude of what Tom's contribution was, again, not only to our community, but really to to the investment community at large and even broader. I think Steve said that was the first time he missed a closing bell in his career, I believe. Was to attend that ceremony. So
I like how he snuck in the back, and they, right, like that.
That's right. And it was more his appearance, spoke volumes, which was great. And obviously his time is he was heading from there to the Mets game right after that event, right? So the fact that he
that's how I roll. That's a very Cuban thing to do, right? You do some work, you go to the baseball game,
Yeah, you attend an award ceremony, you hit the baseball game. I heard you at the baseball game yesterday, JC. I love it. Minor league hockey, baseball.
Iron Pigs yesterday. AAA baseball. Doing a lot of minor. It's great to take kids, to minor league stuff. In the minor league hockey, you got more scoring, you got more fights, and you got more mascots.
Right? Hey, it's a great family event.
Come on. And baseball,
just like our events, like last year in New York City and this year in Dubai. But again, just the people that come out for these events, it's for me, spending the last 15, 20 years as a volunteer, it's those relationships and just learning from the giants, right? The guys like Ralph Akinpour, the founders. And again, I think last time I was on the show, we talked a little bit about, I think it was in the fall, and, I pointed out doing a lot of work on Steve Luthold, who also passed away as a Formula Annual Award winner. He, in his obituary, or not his obituary, but his reflections on his career, he was known for his bullish call in 81, actually, it was 82 that bull market started, right? And that kind of built his career at Luthold. But he wrote a book right around then in the 80s that I mentioned last time, the myth of inflation, right? Because we just came out of the 70s, and he did a really deep dive on interest rates and inflation. And again, predominantly more of a stock guy than he was a macro or a strategist, but his deep dive on his work on interest rates in the 70s, led him to his big call in 81. And, obviously that was the start of the new bull market. And
so not the death of equities, in other words.
It wasn't the death. Well, it was coming out of, obviously that was the end of the cycle. I think what I was talking a little bit earlier is like, hey, I think we're at the beginning of the cycle, and I was speaking to our sweet spot, which is more tactical. Like, we're not stock pickers. I know. Hold
on, Bill. We're going to get into the markets in a minute, but we just dropped the link for the cmtassociation.org. So if you guys have no idea what the hell Bill's talking about here,
awesome.
We are all members of the CMT Association. Great community. Strazza, myself, and Kelleher, for that matter, we've all traveled all over the world to many cities, many countries, and met with friends in their local cities. In many of these occasions, they had already come to New York. In a lot of these instances, they've come to New York since then. So all three of us here have what I would consider very good friends, like very good friends in cities all over the world, in Asia, Europe, Latin America. And it really is such a blessing, right? Isn't it cool having good buddies in all these cities, Bill?
And eventually, it's not a good buddy. It's great cities. So people end up traveling too. So it's a great place to meet, share ideas. A lot of times I say too, you get some takeaways at all these events, but it also does a little bit what you do every day too, JC, right? It erases some of your biases, right? If you go to an event and you're talking markets and you're kind of, opens up your mind a little bit to other perspectives, maybe other rationales, and it makes you think a lot more. it's a great kind of like, I always call it like a great cleansing of the slate, right? Like last year at the 50th, I can walk away and hear your perspectives and hear perspectives from 50 other people that I respect. And then you kind of go back and you start working again on like, it gets your creative juices going. All right, what's our, it's a starting point for your next 3-6 months and whatnot.
I like what you said. It helps your mindset, right? I always like to say we're not just Americans, we're earthlings. So understanding the way people in another part of the world that grew up and live in a very different way, in a very different culture, how they're looking at markets really helps give you that perspective, which is why we're looking at Bitcoin in yen terms, which is why we're looking at emerging market currencies, which is why we're looking at countries all over the world, right? London FTSE 100 making new all-time highs, for example, with zero technology exposure, really helps give perspective. And also, about getting your mind right and then getting back to work. Every time I go to India, when I come back from Mumbai, I come back so energized and so like rejuvenated and so fired up, to get back to work. The energy that I get there. I have Mumbai in particular. I can name other cities as well, but that town, it's a really, really cool town that really gets me going. If you guys have not been to Mumbai, get there.
And listen, the event we just did in Dubai that you just highlighted too. I mean, that's kind of like the new gateway. Like that was my first time to Dubai, and I was super impressed that it really is like the epicenter now of like, you speak about Mumbai and India. India is booming, but it's still heavily regulated. So a lot of what's happening in India is actually happening in Dubai, which was pretty amazing. And then they set up the DIFC, which I just learned, check this out. I mean, it's about 20 years old and it's fully developed, but it has its own jurisdiction, its own laws. And it was essentially set up to attract foreign investment. Now, all the banks, all the hedge funds are there now. They're all moving there now. But they're not governed by local law. So they can't compete with local businesses, but they're there to attract investment from all over the world. And the CMT Association, we just did a great partnership with the DIFC. We're incredibly excited about that. And we see it as a great opportunity. So we will be going back to Dubai next year in some capacity. I don't want to get too far ahead of ourselves, but it was an unbelievable experience. Guys like John Bollinger came over to another one. Speaking of Tom DeMark, is going on his 5th decade of work with the markets and still flying halfway across the world to spread the word, share the gospel, so to speak, JC, but no, to educate, and represent the organization. So it was incredibly, incredibly neat opportunity, like you said. And again, going back here in the States, we did an event in Tampa this fall. Again, Bob Farrell, founder of the organization, legendary, technician, number one.
Was Bob Farrell one of the founders? I didn't realize that. I mean, I know he's the man and everything. I didn't realize he was that intimately involved with the organization in the early days.
He was the first president, and actually it was Bob.
Really?
They needed to get Bob's blessing in order. When Ralph went to Bob, and he's like, I'll do it, but I need the whole street. This was how the great foresight of Bob Farrell. But you need, and think about the competition back then. I mean, you're talking about desks that, not like the modern day of 1 or 2 technicians. He had a team of like 20, and guys like Prechter was on his team, at that point. And, Bob went back and said, hey, I'll do it. I'll be the first president, but you need buy-in from all the other major wirehouses or major banks on the street. And that's how it started.
Bill,
all right, Bill.
I think either of you guys could take this. Why does the CMT have a year of professional work and a sponsor? Done most of my learning, reading books. It's talking about the work experience.
So the CMT,
that's important.
It is important. So the CMT was actually was founded. What's interesting is back in the 50s and 60s, there was obviously a lot of like misrepresentation, in markets, and there was a bull market in the 60s, and there was a lot. The tip and clip club was famous, and guys just kind of throwing out. And there were a lot of people that claimed themselves as technicians. But to go back even further than that, it wasn't just obviously in our community. The CPA was the first to start, right? In kind of having a standardization of professionalism, so that if somebody went to somebody, they felt comfortable being like, I can trust this person. He's got some sort of training, some sort of professionalism. So we're a professional organization, that was modeled after, well, first the CPA, and then the CFA actually modeled themselves after the CPA. It was actually the New York Society. It was NISA that was the, more of the localized organization that actually started the CFA again modeled after the CPA profession. And the CMT wanted to do something similar for a professional designation, so that, you could, and same with CFP. If you see the commercials all the time, the commercials on TV are like, hey, you're okay. It's somebody that's, they try to say it's somebody you can trust,
It's the same with any professional body. It's so important. Anybody who's been to college can tell you, oh, I learned a ton in college, but it wasn't until that first year actually working where I really started learning. Same with the CMT. It's one thing to learn from the books. It's another thing to go out and practice it on a team of technical analysts.
I went to a pretty good school. Fairfield's a great school. I don't really remember learning much. I learned how to tap a keg. I learned how to throw a great party.
Stop it. You learn plenty. The Dolan School of Business. It's an excellent business school, but I get your
point. But I can't tell you. You know what I did? You know what I remember the irony in it all? Probably what I learned best was like the difference between like an income statement and a balance sheet. Like some of those, like, which is hilarious here as a technician talking about the things that stood out to me are the accounting.
Income statement. It's the difference between theory and practice, right? It's one thing to be book smart about something. It's another thing to actually go out and practice it and watch the market every day and try to, employ the technical analysis that you learn from the book.
All right. Can we talk about the markets then? We got Bill Kelleher in the house here. We're talking about Dubai. We're talking about college. We're talking about minor league sports. Can we just get down to it? Let's go. Bill Kelleher, is the S&P 500 going to 6,000 or not?
Listen, again, going back to our last conversation in the fall, right? And Steve Luthold, what I was talking about is listen, we're early in this cycle, right? We just come out of the financial crisis, and even back to 01, right? We've been in an interest rate cutting environment, and those cycles, interest rate cycles, typically last around 30 to 40 years, right? And we find it took an event like COVID to really snap that cycle, to really, that the negative interest rate cycle. And now we're early in this next cycle, and that's where we come back into our sweet spot we were talking about before. Like, we're not at ETF Concepts, and we're rebranding right now. ETFs were big in like the 2000s, right? Most people don't realize, but the first ETF was in like 92 SPY. And then Qs didn't come till late 99. And it wasn't until like 2000 and 2010, there was enough liquidity and enough ETFs where you could start to build strategies around them. So you can be tactical now. It was very hard to be tactical in the market, going back, 30 years or so, really even 20 with any type of size or institutional ability. But now you can be tactical. So what I'm saying here is going forward, and what we talked about in the fall, is you have to have more of a tactical mindset with the market. Now you can do that in a number of different ways, right? A lot of technicians rotate different sectors or use relative strength or whatnot. Us at ETF Concepts, we use the market. We use the S&P, recognizing that it's just so hard to beat the benchmark, right? 75 to 90% of managers don't beat the benchmark on an elongated basis, right? Once you get out more than one to 2 years. It's really hard to beat the benchmarks in a normal environment. Never mind an environment that we're going into now with a lot of headwinds, right? Again, Steve Luthold, myths of inflation. You look at it, markets do well when prices are stable, right? History shows. That's why I like going back and following these guys that, the DeMarcs, the Bollingers, been in the market for 50 years, right? They've done the data, they've done the work. Now you have to go back and look at prior cycles, look at history, because what doesn't change, JC, is fear and greed, right? That's what drives price movements, supply, demand, right? And so right now, I love you're looking at the Tesla chart. I mean, it's tough not to make an argument just looking at it right now. I mean, the great thing about technical analysis, and again, what we're doing is like, all right, what's happening right now? I mean, right now you're in a fight with the bull and bears, right? But you can kind of see we're eating away a little bit of that demand, right? Slowly. And the more times we're kind of battling around that support level, the hands just get a little bit weaker.
You think Tesla breaks?
It looks a little bit like this. Hey, he's one of the best, right? We're not trading on Elon Musk. We're not trading on fundamentals here, right? So Look
Thank
at it now.
God.
He knows he's fighting the support right here. His back's to the wall a little bit. He's doing a deal with China. He's trying to keep the narrative going, right? For as long as he can here. But I would say this, I'd rather, I mean, if you look at something like, I mean, listen, we're not early in the cycle again here, right? So I worry a little bit. I'd wait for some more confirmation. I don't think it looks interesting for me here on a risk reward basis, because if this thing does crack, there's so much leverage built into this stock that it could be painful. Even muscle leverage.
The 61.8% retracement of the entire rally off the COVID lows is about 173.
It depends on what your time frame is. You know,
we're
for me
above,
again,
we're
right
above
here.
that. I think if you're shorting Tesla, you're crazy. But yes,
Right.
Bill, I agree wholeheartely. It gets down to time horizon. You want to short it right here for a day trade, knock yourself out.
Yeah.
If you have an intermediate term or longer term time horizon, I think you accumulate the shit out of this down here as much as possible. I really like the stock a lot. I think it doubles easy.
Hey, you know, his track record's so good, like I said, and he keeps the narrative going. He knows how to work he knows how to work, you know, he knows how to work the investment community. It's not his first rodeo. He's built four major companies, right? So he knows how to play the game.
You mean he's not the richest guy in the world because he's a dummy?
Exactly. Yeah. And he knows how to talk his book, right? Think about his plays in Dogecoin and Bitcoin. Like, he knows how this game works better than anybody.
And kudos to him. Whose book are you supposed to talk? Like,
exactly. Right.
Right.
You guys
he's talking his own book.
Exactly. So he'll figure out a way, like I said, to keep the game going as long as he can. The thing for me is, again, at some point, it's going to break, right? At some point it will. It could be way down in the future because it continues to be, again, I don't want to use the word valuation, but like, listen, I mean, it's been kind of a stock for technicians, right? It's not a stock that any analyst looking at it fundamentally can really project with accuracy.
Good. Screw them.
Yeah.
This thing's lost 2/3 of its value already, Bill. I mean, you know, what more do you want? It's like I don't know, $1 trillion.
I'm just looking at the chart. This thing cracks, it's going to be painful. It doesn't look like there's nothing really there that would get me like crazy excited for the next leg higher right now at this point in the cycle. I just think there's other better opportunities out there at this market cap and this size.
Listen. When it gets to 300, I'll buy you a beer. Deal?
Hey, that'd be great.
All right.
Hey, I'm not saying it won't get there. I'm just saying I'm not interested in.
All right,
Hey,
tell me
Bill.
what you're interested in.
Yeah, so wait, talk us through this chart you sent over.
Yeah, so listen, it's kind of like the Moneyball of investing. We focus on supply and demand, and you can look at it visually like we did a second ago. I'm just going to try to pull this down. We can look at it like visually from a chart, or you can look at it from the numbers, right? And so what we do is we go through and look at, supply is relatively fixed in the market. Again, if we're looking at all the stocks, all the listed stocks, so this takes in the data from all the listed stocks, and it aggregates them and scores them and creates our calculation of demand in the market. So I guess what we can see here is that here, as we're coming here, this is the S&P, this is the SPY, obviously the ETF, just showing how demand is just kind of falling a little bit off of a cliff here. Now, again, this doesn't mean that like this is the top of the market. It's just saying statistically right now, right here, you want to be cautious. You want to go to cash and wait for some more information. If you think about in the longer term, we have two models floating here, the top one and the middle pane in the top one here. It's kind of our mean revert. Well, the middle pane right here is our mean reversion. It's got about like a 2-week hold. So if you think about demand in the market, we look at it statistically, and on a mean reversion basis, we're buying into weakness and selling into strength. So when our demand is getting really, really low, it's taking a contrary position and it's buying into that weakness.
So you're buying when this WPT indicator is in the red?
No, we're selling right there. So our WPT just crossed into the negative line. So our shorter term right there, we're selling on that move down there. But the bottom pane is that's about to cross as well into a sell as well. And again, if you think about our longer term, it's trend of the indicator. So we're participating with the volume at that point on the longer time frame again. So you're thinking about, we use the same indicator for accumulation, if you want to call it accumulation in the market. In the shorter time frame, again, we're using that as a mean reversion tool. That's like a 2-week-ish hold. But if you go out another time frame, then you're participating with the accumulation and looking at it statistically, back testing. So our mean reversion has about a 66% win ratio edge on the market. And our longer term is a little bit closer to 50-50, but our profit factor is higher because of, it's calibrated to the, to demand in the market, which is what drives prices in the short to medium time frame.
But what exactly is behind these indicators?
So we're scoring it on a price and volume basis, looking at all the individual names. So it's a bottom up approach to drive one indicator for the market. So our theory is it's so hard to beat the market itself. So if you take from a bottom up approach and you take accumulation or demand, your demand score from all the individual names that are listed, and then use it with the overall market signals on the overall market, it's our approach to actually beating the market.
That's interesting. You're measuring the internals in a way then.
Yeah, we're measuring the internals, and we're taking high probability exposure to the market itself to beat the market. So we're trying to, and we do it on two. And the other thing is we use these two different time frames. It's kind of nice in the way we have a mean reversion strategy and a trend following strategy in the same portfolio. 50% of the money's allocated to each. And because what we've learned over time too is if we run these two systems independently, every system has a weakness, right? Or has a mark, that 5%. That's the market in general. That's why we get these black swan events every so many years, right? You want to smooth out those 3 to 5% types of markets that can destroy you, so to speak, or that can really hurt your performance, I should say. So what we've done is we've run, these two strategies independently of each other with half the portfolio in each, and they complement each other really, really well for two reasons. They're built on the same indicator. We're using them in opposite factions, mean reversion and trend following.
Yeah.
And they're each are like one time frame apart from each other, meaning like one is like a weekly, one's a monthly. So it's really kind of a neat system or packaged together quite neatly to beat the market.
So the trend following, and you're almost hedged in a way. The trend following, you're looking a month plus out, and then for the mean reversion stuff, it could be as short as a week.
Yeah, so our inputs are daily on both, but when you measure out the window of time, the snapshot that we're looking at, you can think about it as like, our mean reversion fires off about 26 signals a year, so it averages out. It could be a quick signal. it just averages out to that. But I think of that as our like daily to weekly time frame if you're looking at the charts, versus the little bit longer is a little bit more like weekly to monthly, so to speak. But we're not super long term. We have our third one is actually our top. Again, these are all built from the same indicator, but our third would be even a longer window, which is our definition of bull or bear market. So like conventionally, the market likes to say, hey, 20%, down, up is a bear market. But what do you do with that? It's already happened. You know what I mean? Like so what we try to do is we tried to establish, all right, again, based on demand, because again, supply and demand moves markets, but supply is relatively fixed. You don't have, you have some IPOs, you have some companies that bought, like supply remains fixed. So if you can quantify demand and you can look at it statistically, like you can set up a pretty good model, to beat the market. So what we did is also said, all right, again, supply, let's have our definition of what's a bullish market. It's more buyers and sellers, right? More accumulation. Yep. So we can look at that statistically and say, all right, this is an environment where there's more buyers. What do you want to be in a trend following system when there's more buyers? You just want to participate with them. And it's not that the trend is ended, because again, it depends on how you calibrate your window. Like, for us, we felt comfortable with this time period for our systems. Like this bull bear is actually for our longer term system. Again, our shorter term system is going to have a slightly shorter, definition of a bull market because the window is shorter. So you want it to be appropriate, for your indicator or for your system.
Do you find that the mean reversion strategy tends to outperform or do better in certain environments?
Yes. And the interesting thing is it also does, it does well in a number of different environments. The nice thing about the mean reversion system is it allows you to participate in bullish markets that are trending higher. Now, depending on how that plays out, you could actually outperform or you could underperform because every throughout a year on a 2 week on a shorter term system, like it really depends on how much volatility, right? You could potentially underperform or you could you could outperform. The nice thing is on a sideways market, which we really haven't had a lot of. Like if you go back to even the 70s or some periods, and
Not
that's
for
where we could
caps, at least.
What's that?
Not for large caps, at least. Like if you're
exactly, not for large caps at least, right? But in a market environment, like it allows you to capture return. If you think about if you're trying to beat the market again, that's a great environment for the mean reversion system. So it has the ability to outperform, in trending markets, and we also go short as well. This was built for a hedge fund. So in the times we won't short in a bullish environment. So again, if that top line, which is our bull bear phase, if it's green, we just go to cash. If it's red, now we know there's more sellers and buyers. We want to capitalize on that too. So we'll short in those environments.
And the trend following system where you're looking a month out plus, how many times does that change direction in a cycle? Like when did it flip to a buy in 2022? And then I see it was a sell here. It looks like last summer to October, kind of, right? Like how many times is that flipping each cycle?
Next time we come on, if you guys want, I can actually just dive down into one system, right? Because it actually did really well in pre-COVID. Again, it depends on how. I was amazed at how quickly it did adjust because we went through periods where it didn't fire. Like I think it was 17, right? That was just grinded higher the whole year. Remember, we had a long period without any 1% moves. And I was surprised how quickly it was able to, because it's a longer term system. And again, it's trend following, but not of price. It's trend following of the indicator. Yeah. So it's actually, you're thinking about trend following of demand, which is slightly different than what, most people think about trend following systems when you're looking at just price. So I was surprised to see how quickly that demand fell off, how quickly it did adjust. Being a longer term system, it did offer, great protection. And the fact that because it is calibrated to demand, it's a great protection. It's almost like a built-in, instead of using stops, this is the one derivative of price change, is demand. So it's actually a great system that, I found that has built-in risk management tools just because of the fact that it's calibrated, to demand.
This is super cool. Let the chat know where can they find this? Are you publishing research on this regularly?
It's interesting. Not right. We're getting close. We've been having some conversations about potentially individually putting these 3 signals out on a couple platforms.
Sure.
We've been talking with Optima. I know like Stock Charts also has started to do some of these types of different. It's a different model for us, but we're thinking about this has been operated as a fund, but we're also considering now that it's had an 8-year successful. We outperformed the S&P a good majority of that 8 years. So we've also thought about ways that we could now distribute these signals without, with also being able to run it as a fund.
Well, it sounds like the people want it. A couple questions about where they can find these indicators in the chat. For now, they are proprietary, but maybe you can find them on Stock Charts or Optima in the future. This is awesome, Bill. Good for you.
Proprietary means no, you can't have it.
Yeah, not for you.
Right, Bill?
That's right, JC.
Listen, enjoy Philly. Barclays Prime. I'm telling you. Ask for the Brazilian sommelier. I forgot the guy's name. He's quite the character. He'll set you up nice. Don't let him convince you to get the Syrah. Get
Love
the
it,
Bordeaux or
JC.
the Chateauneuf.
I appreciate the intel. I haven't been to Philly in a while, so looking forward to it.
Thanks a lot, Bill.
Rittenhouse Square, Barclays Prime. Do it.
Love it. Taking notes right here. Thanks, buddy.
Ribeye,
Hey, great to see you guys.
ribeye,
Thanks,
all the
Spencer.
way.
Thanks, Steve.
Thanks, Bill.
Adios.
Hopefully we'll see you guys soon.
Thank you, Bill.
So that's really cool. They built their own little system, which a lot of people do. And then you'll find these indicators find their way to stock charts or Optima or anywhere else. Like I've seen it so much in my career. I remember when I first started learning, you couldn't even get an AV WAP anywhere. Now, any platform you go to, you can get them. So it just takes time sometimes. Maybe Bill's indicators
have it so easy these days.
We'll come to a platform near you soon. Yeah, that's right. You know, some of the people we have on the show, they probably think we're crazy. Their minds are probably blown at all the tools that we have at our disposal today because they used to just chart out price on graph paper.
I mean,
now
Louise Yamada.
I would argue that might have been helpful for some because, JC, you talk about filter failure, information overload. It's an easy trap to fall into when you have these platforms that let you put 15 indicators on a single chart to the point you got to scroll down to see them all. They're really lending themselves to overdoing it, right? Or doing way more than you should. Back in the day, you just had price on graph paper. And frankly, even now that we have all these tools, I think I could make a really good argument that it's better to just have the price on the graph paper.
Well, if you've noticed, most of our charts are just price,
right?
Unless there's a study like a rate of change study that we want to point to or a momentum.
Time and a place for a lot of these indicators. They're incredibly helpful. We use them every single day. But at the end of the day, price.
And I'll just address this. I'll just address what kind of mentally challenged people actually still graph on paper. The way I look at it is that you are wasting so much time.
I agree. I know.
Right? Hold on.
Yeah.
Because I get this question sometimes. They're like, "Oh, JC, but you're wasting so much time doing it like a caveman. You could be spending that time doing more technical analysis on other things, right?" Yep. Back in the day, our predecessors, good friends of ours, Rafa Campora, Luis Yamada, guests on our program, they used to have to do it. Not because they wanted to, but they actually had to do it. So that took time away from doing more technical analysis, right? Running these scans, building these scans, having the meetings we have, getting creative, right? They weren't able to do that. We can now. So to take time away from that so that you could draw lines on a piece of paper, I think it's silly. I think
you're looking for attention. You're looking for attention. If you're not using,
who are you talking to right now?
No, nobody. It's not important, but I couldn't agree with you more. Like you have to play with the new toys. You have to play with the new tech.
Talking to?
Nobody.
No, I get this question all the time. Yeah. I get it more often than you think.
Here's the best thing about platforms today. When I have conversations with our friends, I know Jason is in the chat at TrendSpider laughing right now. When I talk to people, it's all about speed. Rob asks me, "Hey, what do I need to do to make you use Koifen more?" Speed. I want to just go bum, 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 and fire through charts, right? Because that's how these platforms make me more productive. I can look at 1,000 charts in 30 minutes, just rip right through them, quickly filter by new highs or momentum, whatever it might be. That's really the power of most of these platforms. You're right, JC. We could look at
getting great comments here. Hate it when someone tries to force me into Syrah. There's a time and a place, Christos. There's a time and a place for Syrah. I don't think a bone and ribeye is one of those places. I keep trying, keep failing. Stick. If it ain't broke, don't fix it. Stick with the Cabernet or even a Chateauneuf. What are we supposed to do with a lifetime of graph paper? Give it to the kids to draw, right? Give it to the kids to draw. Take it to a restaurant so they give them something to do. What's in the wooden box, JC?
We get
cigars. They may or may not be from Cuba. I don't know. No comments there. And we're talking to a 70+ audience in the chat. I don't think so.
I don't know.
I don't think so.
He's talking to me. Peter's talking to me. That's who he's about my question. Can we do a couple? Right. We'll do a couple stocks here, and then we'll bring on Mr. Cully.
Give me the news.
Can we talk about Domino's? We're talking about Domino's. This every quarter, this company a beat and a beat. Same store sales growing like clockwork, up 5.6% year over year. Stocks up 6% this morning? I think somewhere around there.
Shout out to our friends Michael Batnick. He was buying this one back in, I don't know, it was January or February, as soon as the base completed. And what a trade it's been already. Look at this. This is one of the greatest tech stocks out there.
Yeah. No arguments for me.
It is. These guys really figured it out. You know who else is just cleaning up with their tech? McDonald's. Good for them. No, nothing.
And anyway, no, I mean,
I don't know how I don't know how
yeah.
anybody eats. I don't know how anybody eats this shit. It's
That's-
garbage.
But that's what's amazing about this story. No one's arguing that. They said, forget the food. Let's focus on the tech and the customer experience. I mean, what a model. What a model.
You're eating Domino's pizza or McDonald's. Like, that's it. You just stop. You're doing it wrong. You're living your life the wrong way. Stop.
No, but what a model for other fast food restaurants. If your food sucks, you still got a chance. These guys really figured something out. Is all I'm saying.
I don't know. Maybe I'm a Domino's apologist. I don't think they're the worst food ever, the worst pizza ever. I think there's worse pizza out there. But
so this is
bad.
This is important. Let's contrast this with something like Chipotle, right? These guys are polar opposites. Okay,
We need to bring in Spencer's wife to talk to us about Chipotle.
No,
wait,
but
why are they opposites?
Chipotle competes on quality. Domino's does not compete on quality. It competes on convenience and their technology, right? And price.
As someone who's I'm pretty bougie, when it comes to my Mexican food.
Successful.
I haven't had Chipotle in years, but I don't remember it being terrible.
Chipotle, you know what's funny about Chipotle is I don't know if it's still the case, but the brand identity for a long time was that they were the bougie alternative to fast food, right?
Was Chipotle?
But I think, yeah, sure.
Yeah, they still
It's the bougie alternative to McDonald's and Burger King, right? And Wendy's. But I don't know if that's still the case.
I don't
anymore.
even think of them as alternative. I don't even think they compete with Burger King or McDonald's. There's different people. I think. Chipotle's like pretty healthy.
I need to have the Chipotle again. I don't know if there's a Chipotle by me, but I'm gonna find out.
But isn't their food like
back.
standalone healthy, Spencer? Like it's not bad for you, right?
Chipotle?
I don't know if I'd call it healthy.
Like
From a caloric standpoint, it is very calorie dense, right?
Yeah.
But
okay.
That's what they've led you to believe.
You're eating a lot, but you're eating a lot of proteins and vegetables. You know,
it's good stuff. It's not a Big Mac, is what I'm saying.
Right.
Okay, wait, and then one more, and then we'll bring Ian on. Wait, can we look at the SoFi chart? They beat and they raised their guidance this morning. So
this just continues to be awful.
Oh, and I should mention it's down 10%.
What? I didn't hear the last thing you said.
You should put your earpiece
down 10%.
I tried it. Yeah. All right. This one just can't complete this base. It's been so slow.
Spencer's the only customer.
That's not true. That must not be true. If they're raising their guidance, that must not be true. Right?
The numbers aren't bad here. The market just doesn't seem to want this name.
No, they don't.
Spencer, can you throw up slide 2 and drop the link in the chat for people to watch? So I have I have connections out in Vancouver in the gold bug world, and I'm talking to my boy Tommy. Watch the interview that I did with Tommy. If you're a history nerd like me and you like hearing old stories about any investment, he talks about stories going back to the 50s and 60s. That was very cool.
What is this?
This is the stock he likes the most.
Who?
This is a $500 million miner in Vancouver, which basically makes this a mega cap in the space.
Tommy who?
Tommy Humphries.
Tommy Humphries. Wow. Okay.
You don't know Tommy. This is before your time.
Yeah.
Tommy Humphries done very well for himself over the years. I don't know anyone who is as connected as he is in the gold mining space. He's OG gold. He's gold native. Stock market second, right? Gold native. Stock market second. TradFi bro through and through. He's the guy. So you want to hear a really legit conversation with somebody who knows the business exponentially more than I will ever know. Great conversation. And this is his favorite stock, making new 52-week highs, Aris Mining, ARMN. Just a
I mean,
heads
you
up.
could do a whole like show on this. You could start interviewing gold mining CEOs. They love doing media. You could
I'm
get
definitely
every
not
single
gonna.
one of them.
I don't want to talk to
I don't know if we
CEOs.
want to go that route.
Keith Neumeyer,
Yeah, hold on. And I'm gonna tell you something else. Not only do I not want to interview the CEOs, what Tommy calls them, he doesn't call them gold stocks. He calls them gold stories.
Stories.
He doesn't even call them stocks. He's
Yeah.
like, yeah, I own about 10, 15 stories.
Yeah.
Like he
love
literally
that.
calls them stories. I thought that was so good.
I think people should think about more stocks that way. When we bought Uber, it was a story. When we bought Coinbase, it was a story. When we bought DraftKings, it was a story, right? And then those stories have to materialize. The same thing as pulling gold out of the ground, right? It starts as a story, these juniors. That's all it is. Hey, we got this great parcel of land. Cool. What's in there? Right?
Who knows?
I love that. Can't wait to listen to this interview. Fantastic. How fun. So Precious,
Speaking of gold,
let's get Ian on here.
well, you want to bring on Ian? Yeah.
Yeah. I don't want to talk about precious metals without Ian.
Bring them on. Great point here, Bob. They are memes. Gold is the original meme, right?
The original meme?
Yeah.
Yeah.
Think about it. What's a meme? Right? It's a
I don't
story,
know. Yeah.
right? It's the
story.
original. Gold is the original meme coin. It's a
Yeah.
group of individuals, who believe in something, and together made that something worth X amount of value, whether it be a goat or a suit or whatever people have needed over the years, right?
When
Yeah, I
scroll
guess.
through-
I thought it was, I really enjoyed that interview with Tommy Humphreys. And I thought it was funny that he has physical gold and he
course
keeps
he
it
does, though.
by
He's
his bedside.
But did you hear what he
Um,
said? Did you hear what he said? He said that you want to keep small because if the world comes to an
Yeah.
end and you need gold, if all you have is a bullion, then you're going to give the
Right.
bullion. If all you have is one coin, then you're going to give the coin.
Yeah. But his stories were great. Again, if anyone, if you haven't watched it yet, please do. You'll enjoy it.
The problem with the tulip, it was just one cycle, right? It was just one cycle. This gold is much older than tulips, and it's gone through many, 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 many cycles, right? It's the what's the thing where the longer something lasts, the higher the likelihood that it continues to last? What's that one? The what's that, Spencer? What's it called? The
We talked about it a couple weeks ago.
Talked
The
about it
Lindy
recently.
effect. The Lindy effect.
the Lindy effect, right? Gold is like the ultimate Lindy effect, is it not?
Never heard of that. All right, Ian, where's your head at? Are you pressing the gas on this precious metals trade? Are you rotating into other things? And are
Wait for the
feeding the ducks
breakout.
a little
Wait
bit?
for the
At least on
breakout.
spot.
Right?
Yeah, I
Ian,
think
wait for the breakout.
Yeah, I think just in general, commodities, not just gold. I'm looking for some corrective action here. Looking for some corrective action in copper. We're already seeing it in crude oil. I can see copper go all the way back down to 4.25, and no real damage done. Aussie yen, dollar yen hitting big levels. I think those reverse lower.
Yep.
How much lower
and a
we'll see?
A lot of volatility coming in at this big level.
Yeah.
In Aussie yen. See this all the time.
Yeah.
It certainly feels like an inflection point or a turning point in the trend.
Yep. So yeah, near term, next couple months, I think rates probably pull back. Maybe a little dollar weakness. Commodities chop around. I mean, it's been a messy market, so I think it continues to be a messy market.
Everything but copper's been messy.
Yeah,
Man.
but it's still below those former all-time highs.
Yeah.
It still has some work to
Not
do.
priced in yen.
Copper's running into a big test right now. Copper's running into the level, right? Gold's already got that work done.
Mhm.
Copper and crude are behind. So probably more opportunity cost here in copper in the back half of this year, Ian. Is that where your head's at?
I don't know about that far, but yeah, definitely over the next few months for sure. Yeah.
The miners incredibly strong. Freeport knocking on the door.
Yeah.
What should we
PVMs
make
look
of this
good.
yen reversal last night? Was that it?
I think so. So my limit order got hit last night around 9:30, and I sat there. I go to bed around 10. So I sat there about 10, 15 minutes, and then I decided to go ahead and flip and go short against the high.
Dollar yen.
Yeah, dollar yen. So I shorted the dollar versus the yen last night. I wake up really early. I wake up around 2:30. Close it out. Picked up almost 400 pips. So I'm flat now, but I like selling any rip tomorrow. Any post FOMC announcement rip, I like selling the dollar in here for sure.
Full fade.
Yes.
So, yen future is one of the most oversold levels of all time, and I would imagine then USD JPY probably one of the most overbought readings of all time.
Yeah, and you know, speculators are way off sides too. So.
Oh, really?
Yeah.
Oh, we should have asked Jason Shapiro about
We
that.
did. Well, I mean, he talked about it. He said currencies in general, dollar.
But not yen specifically.
He didn't mention yen by name. He mentioned Swissy by name, but he alluded to the extension of the dollar. And the yen obviously is an important one.
Anything standing out on the COT positioning front, Ian, right now?
Yeah, yen and Swissy.
Cotton.
Anything in the world of commodities?
Cotton.
Cotton. Well,
right. Sugar.
Wheat's pretty. They're pretty extended in the wheat markets. You know, palladium's still close to those all-time readings. Yeah, it's just, you know, you got to wait for the unwind. I mean, I those extreme readings are just kind of a heads up. Pay attention, and look for an entry point on a price chart.
People in the chat asking about Nat Gas. I swear it's not me. Nat
Yeah,
Gas.
I mean, I really like Natty Gas. I wrote about it on Friday. You know, I think we've seen the bottom in Natty Gas. I think I think we've seen the low. You know, breakout here in the next few months.
Okay.
And then rally for a couple of years.
Let's get back to the yen for a second. Ian, if 99.999% of investors are never going to trade the yen ever.
Yeah.
So why should they give a shit?
Because dollar yen has been tracking rates. You know, dollar yen starts to roll over, and we get a pullback in rates. You know, credit spreads start to contract even more. I think it's a big risk on. Even though, you know, you get the yen carry trade and, you know, yen rallying or the dollar yen selling off, you know, you look at that as a risk off signal. I don't think that's the case right now. So I think it would be very advantageous over the next couple months for even like the tech sector, consumer discretionary, and some of those areas of the market.
Is the yen risk off at all anymore?
Or is it don't overthink it?
So I don't know if I don't know if you want to overthink it too much, but that correlation between, say, the 10-year yield and the U.S. dollar yen cross or pair, the dollar yen pair, has been really tight over the past couple of years.
So the way we want to look at yen now is just there's no information about risk.
No, it's more about interest rates. More about interest rates, more about the dollar. Right. So dollar yen rolling over, rates rolling over, dollar index DXY rolling over, and the dollar index is up at the upper bounds of a year plus range. So again, we're in a messy market. You know, we're in a range bound market. Let's trade a mean reversion strategy. Let's short the dollar here.
So if you're thinking dollar yen likely reversal up here, then you're thinking rates have probably seen their highs.
Yes. Yeah. I think the 10 years probably seen its high here. Or it's close. It's getting close to it. It's getting close to it.
I like
Maybe
it.
it breaks above 5 and then it corrects lower. I look at the 10-year or just rates in general as in a corrective phase right now. They had that big rally off the 2020 lows,
Yep.
Peaked last year, and now we're correcting. So yeah, I could see
And
a high. I mean, just
and
hit
it-
Close the
6 month
weekend, new
highs.
6 month highs. New
6
month
month highs, yeah. Just hit 6 month highs. You know,
for
copper
what, 10 year?
been ripping.
Yeah, and 30s.
Here's
Yeah.
the problem. If you look at charts of interest rates, 5, 10, 30 year, they've been rallying all year.
Mm-hmm.
And even get overbought. There's no momentum here.
It's been a strong rally though. That's tough to.
30 year never got overbought.
I don't consider these overbought readings. You would have to like really squint at it. I'm not seeing overbought.
I'm squinting and I don't see it.
Maybe the 5 kinda did, but no. I know 5 kind of got overbought. I don't count that. Yeah, that stands.
So you
out.
guys don't like Domino's pizza?
Fuck no.
Don't you live in the Florida Panhandle? You guys don't know anything about it. It's like my wife
Well,
the
that's
other
the
day.
thing. Like we don't have the options you guys have.
My
Dude.
wife the other day was telling me
This is
how
Florida.
good this bagel is. We have like this, like where I live, it's all Gentiles, right? Like it's too far west from New York. So our bagels are unedible. And she's like sitting there telling me how good the bagel is. I was like, you're telling me what was my wife is very thin. I was like, when was the last time you ate a bagel? She's like, I don't even know. And you are no one to judge what a good bagel is. She's like, well, I liked it. Yeah, well, you don't know you don't even know what a bagel is. Like if it was broccoli, I would trust you, but you don't know nothing about bagels, woman. And she started laughing. If you don't know, you don't know.
Yeah, I'm with you. People love Domino's where I live, Ian. Like
My
my
neighbor the other day,
We love
he's got this California Pinot Noir from Napa. He's like, this is the best wine in the world. He's telling me. Best wine in the world. Pinot Noir from Napa. Best wine. You know, you should try the Pinot Noir from Burgundy.
Yeah.
Where Pinot Noir comes from. That's like somebody in Nebraska being like, they just discovered pizza. Be like, oh, pizza's great. You should try the one in New York.
one hole is saying, wait, isn't Florida mini New York? I got to address this.
Well,
Yes.
No,
No,
he lives in
no.
Alabama, dude.
Stop.
Thank
Hold
you,
on.
JC.
You are not no longer the resident Florida man on this show.
I'm not.
Yeah.
I am Ian. You live in Alabama. The
Yeah.
areas of Florida that Ian and I live in, no. If I were to go up to Boca or near where my parents live in South Florida, yes, it's New York relocated, and not just New York. It's New York, New Jersey, Connecticut, relocated down to the East Coast of Florida. And the pizza there, the Italian food there, Miami even, fantastic, incredible. I feel like I'm back at home because it is just people from Connecticut and New York making the Italian food down here. Not where Ian and I are though.
Yeah.
We don't have that. We have the Domino's. We got the Domino's.
All right, let's. We're already in a recess, but might as well just do it.
Yeah, I was gonna say.
What the heck? Yeah, I don't know.
One hole's absolutely right. There is New Haven style pizza all over South Florida right now. A guy who used to work at Frank Pepe's opened a pizzeria like 2 blocks away from where my parents live in Stewart. It's fantastic. So people say it's like, oh, the water is not good enough. You can't make it the same way. I don't know how true that is. And then Stock Market Mike, I also agree. Make your own pizza before Domino's, or even DiGiorno, I think is better. But
Oh,
that's my recess. I could talk about pizza all day. We could do a
there
full
are
morning
few
to talk
things. There are few things in this world that are worse for you than frozen pizza. Like they literally put poison in there.
All right.
Dude, like
Would you
seriously, it's one of
rather
the worst things you could eat.
Stop.
Really?
You don't think there's poison in Domino's? Would you rather have Domino's or DiGiorno? If it's one or the other,
I'd rather just ram my head against the wall if that's the
pick
decision
one.
I have to make.
you have to pick one. Go get
I'd
yourself.
rather starve
DiGiorno.
to death.
I want you to try DiGiorno's. I don't think
Can I-
you know. It's not
All right.
bad.
I actually had one the other day because my wife bought it for my daughter, and I had a slice. It was horrible. It was like biting into a cardboard box. Terrible.
Okay.
You don't get the Domino's app experience with DiGiorno's.
Oh,
So
It's a great app.
Hold
Okay.
on.
Enough.
Yeah, go
all
ahead,
right,
Tom.
guys, let's go. We got to get back to work.
All
I
right.
got to go.
I have a really good recess. I want to give a shout out
Please.
to one of my closest, my college roommate, who got the call yesterday. Scott has been the voice of the AAA Jacksonville Jumbo Shrimp for the last few years. Is the AAA affiliate for the Miami Marlins. He got the call yesterday. He's making his major league debut on the microphone. Marlins Radio, May 18th. I'm so excited. This guy has been grinding away in the minor leagues for basically a decade.
This is
and
your
he's
friend?
making his major league debut behind. Yeah, he was in my wedding. I was in his wedding.
Very cool.
May 18th.
Awesome for him.
My friend Scott, Marlins Radio, making the call. I'm gonna be listening. So proud of him.
Tell him to
Love
get
it.
me some tickets.
So proud of him.
Love it. Still asking about
yeah, I
Miami's
mean,
best pizza, Frankie's.
Wait, what's the best pizza in Miami?
Yeah, they're playing the Mets. His parents are coming down. Gonna be what? Sorry.
I would go,
I'm losing you, Spencer. You keep coming in and out.
but get me some tickets from your friend.
Hmm.
I would totally go. I've never been to a
All right.
Marlins game.
Anyway, great
All right, guys.
job,
Adios.
Scott. Proud of you. Thanks to our guest today, Bill Kelleher. I'm delayed here. I don't know what's going on. We're gonna end the show. We'll make some money. Oh, it's Monday. We got the Flow Show in an hour. See you there.
Adios.
Bye, guys.
Good week.
I can't take no